Light on Indigo for a second, and this is an exclusive conversation. This is a stock that has been in focus. It's been betting big on air travel demand and capacity growth, even as peers have added capacity. CEO Pieter Elber spoke with NDTV Profit and remains confident about the long-term opportunity in both domestic and international markets.
So when you look at the guidance, Indigo is guiding for high teens capacity growth in the third and fourth quarters. So along with this upward revision to the full year outlook, something that the markets are likely to cheer on Thursday. But tell us how the forward bookings are looking. Are they really that strong? Because October air traffic growth was just about 3%. So are you expecting a sharp pickup for the rest of the third quarter?
I think the underlying dynamics for India in terms of GDP growth, in terms of the fact that many of the markets are still underserved. If we look to the number of seats per capita, India is still much lower than other parts of the world. So the opportunity in terms of growth is still very much there. That's on the domestic side. It's perhaps even more so on the international side. So that kind of fuels our ambitions going forward. We have indeed solidified our fleet position. We had a lot of new planes entering into the fleet, and that allows us to slightly nudge up our capacity guidance for the full year. And indeed, after the first two quarters where we had some moderate growth and stability, partly also by external factors, there was some runway maintenance at Delhi Airport. We're actually quite bullish on the third quarter and the fourth quarter when it comes to our capacity guidance.
So you're talking about high capacity, Mr. Elbers, but your peers are also adding all that high capacity. Is that not going to impact your yields or perhaps increase the competitive intensity in your sector?
Well, competitors are making their own decisions. I think what is driving our network is an unparalleled network and an unparalleled footprint. Today we fly to 94 destinations in the nation itself, a little short of 500 routes. We have expanded very significantly international, and we continue to do so. And if we see the market share of Indian operators in the international space, that is still lower than that of the foreign operators. So the opportunity for us actually not only to benefit from the growth of the market, but also to take some of the share of some of the foreign operators into India. I think that opportunity for us makes us confident that that capacity growth will be there, and then the others do what they do. But I believe that we have a customer proposition and cost leadership allowing us to be competitive in that space.
Tell us about the other cost items, Mr. Elbers. Something that might worry you right now. You guided early single-digit cost growth for FY26.
Yeah, I think there's a lot of cost, and especially on a global scale, we see with the shortage of supply chain that some of the maintenance costs, for example, of bringing fleet to outside India are rising. That's exactly why we have taken a strategic decision to start building our own MRO facility, our own maintenance facility here in India itself. We have two hangars today, one in Delhi, the other one in Bangalore, and we have acquired a significant piece of land in Bangalore to start building our own facility. We're going to invest a whole lot of money to build our facility there, and that should help us both from a cost basis as well as to have more influence on the MRO part of our business.